Hello everyone, welcome. Let me start with a question for business owners watching this. If you have employees in your business, are you calculating their PAYE tax correctly? Many small and medium-sized businesses in Nigeria pay staff salaries every month, but they are not sure how to properly calculate PAYE tax deductions. Some businesses deduct too little and face tax liabilities later. Others deduct incorrectly and create problems for their employees. In today's session, I'll explain how PAYE works in Nigeria and how to calculate it correctly. We'll cover what PAYE tax is, the step-by-step method to calculate it, common payroll mistakes businesses make, and how to keep your payroll tax compliant. If you run a business with employees, this is something you must understand.
Welcome to Taisha Associates, your trusted partner for SME accounting and financial success.
What PAYE tax means? PAYE stands for pay as you earn. It is the system used to collect personal income tax from employees' salaries. Here is how it works. Employees deduct tax from employees' monthly salaries and remit the tax to the government on behalf of the employees. So the employer acts as a tax collecting agent. This means if your business has employees, you are responsible for calculating PAYE tax, deducting it from salaries, and remitting it to the appropriate tax authority. Failure to do this properly can lead to penalties for the business. Who must deduct PAYE? Any business that employs staff and pays salaries is generally required to deduct PAYE. This includes businesses such as tech startups and digital companies, e-commerce businesses, private hospitals and diagnostic centers, private schools and training institutes, agribusiness companies, real estate and property management firms, professional service firms like law firms, consulting firms, and marketing agencies. Even if you only have a few employees, PAYE obligations still apply. That is why having a structured payroll system is important. So let's look at step-by-step PAYE calculation. Let's go through a simplified example of how PAYE is calculated. The first step is to determine the employee's gross income. Gross income includes salary, allowances, bonuses, benefits, and step-by-step PAYE calculation under the Nigerian Tax Act. Let's now look at how PAYE is calculated under the new tax framework introduced by the Nigerian Tax Act 2025. Under the previous system, employers calculated PAYE using the consolidated relief allowance and several graduated tax bands. However, the new tax reform removed the consolidated relief allowance and simplified the calculation approach. So the process is more straightforward. Step 1. Determine the employee's gross income. Start by calculating the employee's gross monthly income. This includes basic salary, housing allowance, transport allowance, bonuses, other taxable benefits. Step 2. Deduct statutory contributions like pension, like national health insurance, national housing fund contributions, approved employee contributions recognized by law, like life assurance policy. Step 3. Apply the new personal income tax rates. Under the Nigerian Tax Act 2025, the income tax structure has been revised and simplified compared to the old multi-band system. The tax is calculated based on the new progressive tax brackets defined in the updated legislation. Instead of calculating complicated relief allowances first, employers now apply the tax rate directly to the taxable income after allowable deductions of rent relief. This makes payroll tax calculation easier to automate in payroll systems or spreadsheets. Step 4. Determine the payee deduction. Once the appropriate tax rate is applied to the taxable income, the resulting amount becomes the employee's payee tax deduction for that month. That amount is then deducted from the employee's salary, recorded in the payroll system, and remitted to the relevant state tax authority. Let's quickly look at payee tax rate, the new rate. Nigeria uses a graduated tax rate system. That means the tax rate increases as income increases. Because the system is progressive, the tax is calculated in layers rather than on flat rates. This is why payroll calculations must be done carefully. Using payroll software or proper spreadsheets helps avoid errors. Payee remittance obligation. Once payee is deducted, the employer must remit it to the relevant state tax authority. This must be done monthly. Businesses must also maintain payroll records, including salary schedules, payee deductions records, remittance evidence. During tax audits, these records are required. Let's quickly look at common payee mistakes SMEs make. Many small and medium enterprises encounter tax problems because they do not deduct payee properly, calculate relief allowances incorrectly, fail to remit deductions on time, do not maintain payroll documentation. These mistakes can result in penalties, back taxes, and interest. Proper payroll bookkeeping prevents these issues. If you run a business with employees and want a simple payee payroll calculation template, comment payee template. We'll send you a payee payroll calculator and compliance checklist to help you manage staff taxes correctly. And if your business needs help with payroll setup, bookkeeping, or tax compliance, our team at Taisha Associates supports SMEs in organizing their financial records and staying compliant with Nigerian tax regulations. I want to let you know that if you are a business owner or entrepreneurs, please share this with your fellow businessman and also like it. And of course, I'll be waiting for you at the comment section for your questions. And if you are watching on YouTube, please do not hesitate to subscribe to our channel and click the bell so that you can be notified when next when next our video is coming up. Thank you for joining this session. I'll see you in our next video.